morning. Welcome to Market Day Report. I'm Tony St. James. Kind of a big day for us here as we wait for a 1 o'clock announcement from the Federal Reserve. The question is probably not whether the Fed will cut interest rates. It's how deep of a cut will we see? Will it be a 25 basis point or a 50 basis point cut? Well, we'll find out later. Until then, let's look at markets and overnight session for corn. Up 3/4 cent on the D's at 413 1/4. March, May, July, all in positive territory. What did soybeans do in the overnight session? Look at the November at 1016 1/4, up 10 1/4, and that's still nearly 6 cents off the session's high. 9 cents higher or more on all of the deferreds. Maybe Brian Hoops will have a good answer for us in a moment. Of course, he may kick me for throwing that at him. Wheat overnight session in Chicago, December 579 1/4, up 3.5. July 2 1/4 higher, 614 1/2. What about hard red? Up a nickel on the December, 585. July 4 3/4 higher, 609 3/4. Spring wheat, 1.5 higher on the December at 622 1/2. And the cotton market down again, December 71.15 off 101. Okay, we teased it. President Midwest Market Solutions is Brian Hoops, and we were talking just before we came on the screen here about that overnight action in soybeans. Could it be tied maybe to Brazil and CONAB saying the production won't be as big as USDA expects?
Well, it's possible. Everybody's asking that question, why the spike in soybeans overnight? And there is not a good answer at this point in time. That news about CONAB was out yesterday, so it really shouldn't have impacted last night's trade. In fact, we opened the night session. Corn was trading, steady to half lower, beans 1 to 2 cents higher at 7 o'clock. And for an hour, that's how we traded. By 8 o'clock, when everybody had kind of let their guard down, all of a sudden we went to 10, 12, and then 15 cents higher in soybeans. And the entire soy complex rallied, all about the same percentage move, about 1.3, 1.4%, with very little explanation of why. And we held those gains all night into the morning hours, right until we closed this morning. And then beans backed off their highs, meal backed off its highs, corn pulled back as well. So we really didn't change any chart patterns. We didn't break out to the upside or anything like that. We kind of went back and maybe ran a lot of stops last night and pushed higher. And then we fell back here this morning. No private export sales and very little news for the trade to look at. CONAB did say maybe it wouldn't be as large as the USDA, but compared to last year, it's over 12% larger if they get that crop what they expect they're going to have. So it's a bearish number. Our production numbers are bearish. We haven't had much harvest pressure yet. Maybe that's going to come. The seasonals are turning lower. So there's every reason in the world for the soybean market to turn lower here. But right now, it seems like more of the technicals and momentum is in control, and that's to the upside. And until that changes, we just may not have that much downside pressure against these markets.
Brian, I'm just curious if we could look back at what we were thinking maybe a month ago. Would we be surprised to see corn up 3.4% month over month, beans up 6.7%, and wheat 9.9%?
I think you have to be a little bit surprised that we're seeing that much gains during this time frame. The dry weather has probably impacted soybean yields more than the corn, and really didn't hurt wheat, because most of it was harvested during that time frame. So we're seeing, a lot of short covering in the wheat. It's spilled over to corn and soybeans, but it's been kind of a muted rally. So, we haven't gone anywhere. In fact, we've traded 10.03 on November beans every session since August the 30th, except one. And so, we're kind of tied to that level. I think it's certainly possible we even go back to that level again today by the closing bell. Now that we tested the upside and we've fallen back, maybe we pull back here and trade lower during the session. I don't think anything should surprise you at this point with these markets. But it's just a matter that we don't have a lot of that pressure coming to the market at this point in time. Just not enough crop has been harvested.
Okay, Brian, hang on. We're going to take a break, be right back, and we'll look at cattle and hogs. Market Day Report continues in a moment. Welcome back to Market Day Report. All right, this is one we'll be watching, especially after the Federal Reserve's announcement, because gold has been at an all-time high of $25.89.78 an ounce. So we're not there right now, but that's what we're looking for, $2,589.78 an ounce. Could we hit that again this week? Well, probably are not going to hit all-time highs in the cattle market, but yesterday we settled $1.57 higher on October. Live cattle, $178.80, December, $1.50 higher. And for the feeders, on Tuesday, it was a $2 gain on September, $243.30, with October most active at $240.75, up $175. Hog trade has been up 4% week over week, 6.5% this month, and year over year, 9.9% gain in the lean hog market. October, 81.77, up $1.85. Brian Hoops, Midwest Market Solutions. All right, there's the prices we saw yesterday for the proteins. Anything jump out?
Well, we did have hog weights released this morning. They're down about a half a pound from a week ago, so could be a little bit fundamentally friendly. That hog market just traded so much technicals, however. So I think we really need to focus on what's happening with the technical picture of the hog market. It rallied yesterday up near those old highs. So we're getting into some major resistance points, and no doubt there'll be some buy stops sitting above that area above 82 in the October hogs. Cattle market had a very strong day as well, up $1.50 in most of the contracts. I think the cash trade is leaning towards at least steady, if not higher. We saw bids improve late in the week on Friday. Earlier in the week last week, it was steady to lower. Fully steady on Friday. The show list numbers are down this week, so it does appear that we're going to see strength in that cash market. It'll hurt the packer margins, so maybe this cash market's short-lived, but we have cattle on feed on Friday afternoon as well, and that looks to be somewhat friendly with placements 1 to 2% below year-ago levels. The on-feed numbers pretty much in line with what we saw last year. So there's room back to the upside in this cattle market if we can kind of gain some of this fundamentals back and give us that solid foundation to build upon. We can see a pretty decent rally here in the cattle market in the fourth quarter.
Good points there, Brian. Thanks for dropping by and visiting with us this morning. Now go get another cup of coffee, and we'll talk to you soon.